Hi, this is Zak Mir with the Bulletin Board Heroes here at Zak's Traders Cafe for Tuesday, the 18th of February. Starting off with the FTSE 100, which is nestling not too far away from the record highs, so around 88.20. We were hoping that this market would hold on to that mid-channel line there, 87.30, and it's doing that at the moment. Above that, looking for 9,000 by the end of next month. On the downside, worst case at the moment is that we break 87.30 and head down to test that uptrend line from the middle of last month, currently around the 8600 level, but with 3 RSI bounces above neutral 50 in the recent past, looks as though this market is trying to push higher. Moving on to the German market, where one presumes this market is still climbing a wall of worry within a rising trend channel there from back in November. Top of the channel there, heading for as high as 23,800. We're looking for that by the end of next month, while we remain above the floor of the latest gap there, around 22,200. That's just above the floor of the rising trend channel from the end of last year. Moving on to the Dow, and here so the market seems to be a bit more flat than the other two we've looked at so far. So in a consolidation between the record highs 45,000 and the 50-day moving average 43,700. Obviously dips towards the 50-day line, currently regarded as a buying opportunity ahead of a potential break to the upside, which would take this market potentially up to 46,700. Worst case on the downside here is that we've got to test the floor of the channel for the second time in the recent past at 42,900, but at the moment it still looks as though after that bear trap gap reversal that the 50-day line will hold the proceedings. RSI in the mid-50s, which it may suggest that we are half full rather than half empty. If you want a near-term signal, it would be an end-of-day close above that line I've just drawn there at 44,800. Moving along to Bitcoin, which is also becalmed or has been becalmed within a range. The uptrend line there from November, 94,300, and the 50-day moving average, 98,800, waiting for an end-of-day close outside those parameters to determine direction. The only problem at the moment is that we've had multiple failures here at and below neutral 50 in the RSI, so that does imply that we'll have to test at least 90,000 before we rebound, and potentially down to 85,000, which was support on the way up back in November. But ordinarily we would just bounce off that uptrend line and head higher. Moving on to gold, which did nearly hit the 3,000 level, currently consolidating. We're expecting or factoring in 2870, which was recent support for this market, ahead of a move up to the top of that rising trend channel from this time last year at 3,000. Hoping for that by the end of next month, so giving a bit of time. Ideally, it should be by the end of this month. We do break down then, obviously, below 2870, next level is 2800, which was the initial February support and old October resistance. Moving on to the stocks, and not many of them actually, but they're all much appreciated. The first one is Agronomics, which I believe was mentioned in the Investors Chronicle last week, so we'll hope that they've got it right. You can see that the shares were already looking quite perky before the IC mentioned them. God knows how that happened, but initial target here up to 6.55 pence, which is the top of the rising trend channel base. Above that, looking for as high as 10 pence, the upper parallel of that rising trend channel by the end of next month. And ideally, in the meantime, the shares remain above the 200-day moving average at 5.25 pence. So presumably, given that the company, from memory, has lots of cash and is trading under NAV, then there's no chance of any fundraise or any other nasties like that to get in the way. Moving on to Audioboom, which has had a great few months here, mostly tracked from this particular video. Unfilled gap to the upside back in November, which was noticed. Then the break of the 200-day line, so around the 235, 250 area, starting this off, and it's been almost uphill, up and away all the way. Here we've had only that retracement there from 440 to 350 or so last month, but since then really got her act together. Initial targets were, well, the initial main target was £5.10. We've upgraded that to £5.80, and above £5.80, looking for up to £8 by the end of next month. Obviously, the way things are going, it may be a bit faster than that. I've heard one or two voices suggesting that this is a bid target, but actually was a bid target up there at £22 back in 2022, and that didn't happen. So let's see if it's second or third time lucky for the company on a fundamental basis. Moving on to CleanTech, which has got its raise away, and notice the odd interview has been hitting the airways as well, one of them with me. Here we've got a falling trend channel, top of the channel there at 16.7 pence. That's our target, especially while the shares remain above the 14 pence area, which was the old January support for this market. We get above 14 and it's a bear trap reversal. On to EDX, which I believe was in the Times or the Telegraph yesterday after its prostate testing news, and here our first target already hit at 14 pence. Above that, looking for 20 pence as suggested yesterday, and looking for that by the end of next month. Director mark buying in the mix as well, and also two unfilled gaps to the upside, and also the 50 and 200 day lines both rising. So I would venture to suggest that 20 pence is the minimum we'll see on the upside here at EDX, given not only the strength of the news, but also the director buying and the technical setup there. In fact, if you found the shares and looking for greater glories, then they would be up towards that resistance line projection I've just drawn there. Maybe that would be a target 30-31 pence for ambitious fans of EDX, if we can stay above a recent 12 pence resistance. On to a stock which I've never covered before, Elixir International, and here, due to the lack of stocks today, partly here we've got a rising June trend channel, £9.50 the top of the channel there, and we're looking for that while we remain above the £8 area. Perhaps the lowest one would expect is that the shares would remain above the floor of the channel and the latest gap there around £7.74. Next situation is another stock which has been given a mention on social media by one of the better people to give stocks a mention of, and here we've got Huddled. I thought I'd have a look at this as well. Here you can see that we've had a test of the lows, and basically this was right on the old April support. There's a double bottom there for Huddled, and the charting aspect here is that we may be in a broadening triangle base. Top of the triangle there, heading for 3.8 pence, looking for that by the end of next month, while we are above the 50-day moving average and the old October support there around 2.8 pence. On to the last two. I'm very happy about this one because the degree of difficulty, it was amazing or intense or just very high, I suppose is the correct way of saying it. Here we've got Metals 1 going up on or rebounding on the basis that we had a bullish divergence, and we saw the shares bouncing off the floor of that falling trend channel there around 0.22. The target was up to 0.35, 0.4, which has basically been done today. If we can get through the 50-day line and the top of the channel there, we'd be looking for a fresh target here, which would be the resistance line I'm drawing now. So the top of a broadening triangle there from October, heading for the 200-day moving average at 0.66. Best case scenario is we get there by the end of next month, while we remain above the floor of the gap there at 0.27 pence. Finishing off with another stock that I normally look at because it's rather bigger than we normally focus on, but difficult to resist the setup here at QinetiQ. Here you can see that we had a gap down there last month. Two unfilled gaps to the upside, so it's a bear trap island reversal, and while we're above the 50-day line there at £3.96, looking for up to £4.40 by the end of next month. So a nice risk-reward setup there, especially if you believe in the power of the bear trap island reversal, and also believe in the power of bullish divergence, which is also what we have there. That's it for me today. More updates tomorrow.